In today's market update, we're going to be taking a look at the progress of the S&P 500. This is the next update in the series that has been tracking the interaction between price in the S&P 500 with the 20-day FLD. So if you haven't seen the previous updates in this particular series, then I would encourage you to watch those first so that you know what on earth I'm talking about. My name is David Hickson, and today is the 8th of August 2019. Before we take a look at the S&P 500, in my previous market update for Bitcoin, I asked you to give me your advice, and many of you have been kind enough to do so. Several of you suggested that I broaden the question that I was asking. And so I'm still asking for your advice, but with a slightly broader question, because I would like to know, when it comes to making your trading or investing decisions, what is your single greatest challenge? I've been recording these market update videos for some time now, and of course in these videos I'm speaking about an analysis of the markets, and we all have to move from a consideration of the analysis into actually making trading decisions. That's a process that fascinates me, and I would love to hear what challenges you face in making those trading decisions. And if you have a moment or a minute or two, it's not going to take very long. I would very much appreciate it if you could answer that question. The link is on your screen. So before we take a look at the S&P 500, I must ask you, of course, to make sure that you have read and understood these disclaimers. So here is the analysis in the S&P 500 that we have been tracking. And of course, we've been looking at the interaction between price and this purple line, the 20-day FLD. The most recent interaction has been the F category interaction, which, as discussed in the previous market updates, often gives us a good short trading opportunity. In my previous market update recorded last Friday over here, I spoke about the fact that price had come down to the 80-day FLD, which is this cyan colored line, and that although price might find some support at the level of that line, it was also expected to be an F category interaction with the 80-day cycle FLD, and price was expected to break down below that 80-day FLD on its way down to the 40-week cycle trough, the circle of which you can see at the right-hand edge of the chart. So what has happened since then? Well, the F category interaction with the 20-day FLD marks the time at which price turns down and heads towards the 80-day cycle trough. Here you can see the nest of lows for the 80-day cycle trough sitting at the foot of the chart. The 80-day cycle trough is expected, you can see, according to this analysis, at that circle over there, which is in about mid-August. So the big question is, seeing as price has come down and has formed a trough of sorts, is this trough that formed on the 6th of August, in fact the 80-day cycle trough, occurring just a little early? If we measure on our chart, you'll see that that trough on the 6th of August formed 64 days after the 20-week cycle trough on the 3rd of June. 68 days is the average length of the 80-day cycle. And you can see, according to this analysis at the bottom right of the chart, it shows us that the recent wavelength of this cycle has been 73 days. And so that is the range of time in which this 80-day cycle trough is expected to form. So was that trough on the 6th of August, in fact, the 80-day cycle trough? Well, it could have been. It's certainly within the realms of possibility that that 80-day cycle trough did form on the 6th of August. However, in my opinion, I believe that the 80-day cycle trough probably still lies ahead of us. Now, there are many reasons why the 80-day cycle trough probably still lies ahead of us, and I'm just going to touch on a few of them here. One of them is the fact that we have noticed in our analysis, as we have been tracking the progress over the past couple of months, that the shorter cycles have generally been running a little bit longer. You can see that to some extent with this nest of lows leaning over to the right over here. Therefore, we would expect the 80-day cycle trough to occur slightly later rather than earlier. That's just an indication. It's not an absolute rule. The other reason why I would expect the 80-day cycle trough to still lie ahead of us is that following the F category interaction, we expect price to come back to the 20-day FLD for the G category interaction. At that point, price should find resistance at the level of the 20-day FLD before turning down in the H category interaction and turning down to the 80-day cycle trough. And so because I'm still expecting those interactions with the 20-day FLD, I'm inclined to think that the 80-day cycle trough still lies ahead of us. Conversely, however, there are several arguments for the fact that the 80-day cycle trough has already occurred on the 6th of August. One of those reasons has to do with the breakdown of these more prominent shorter cycle troughs that we can see in the market, and I'm not going to go into detail here, there really isn't time, but you can have a look at that and you can see how you yourself would have analyzed this. Of course, in the analysis process, we are looking at the shorter and shorter cycles to identify the positions of those troughs in order to clarify what is happening to the longer cycles. And I think that you will find, if you look at the shorter cycles, that in fact it seems possible, if not likely, that the 80-day cycle trough has already come in. However, there's a really big danger to what I call counting the shorter cycles. Because we're looking at the shorter and shorter cycles, it's very easy to count up all of those cycles and say, therefore, logically, the next cycle that forms in the market absolutely must be this 80-day cycle trough. The problem with that is that you are basing a decision about a longer cycle on evidence of much, much shorter cycles, and the identification of the shorter cycle troughs in the market is often unreliable. Remember that cycles influence financial markets. It's not an absolute science. And so we need to be careful of the danger of counting those shorter cycles and using that argument as absolute proof that the 80-day cycle trough has occurred. Now, if all this discussion about the possibility of this 80-day cycle trough is beginning to make your head swim and you're thinking, I cannot make any concrete decisions on the basis of this, let me encourage you. This kind of situation occurs every single time price moves down into a cycle trough. And one of the most common questions that we get from people is, how can I be certain that that cycle trough has formed? The bad news is that you can only be absolutely certain sometime after the fact. But there is some good news here, and let me explain to you how I approach this situation. Following the formation of this 80-day cycle trough, our next trading opportunity would be an A category trading opportunity, which would usually give us a profitable long trading opportunity. If this trough was currently running late, in other words, it was overdue, and it really was time that this trough formed in the market, then I would be interested in looking at that A category trading opportunity. However, because it is still potentially early and this 80-day cycle trough might lie ahead of us, I am not jumping at that A category opportunity. For one thing, when price next comes up to the 20-day FLD, I am expecting a G category interaction with that FLD. In other words, the FLD will provide resistance and price will be repelled downwards. That is certainly not a time at which I would want to enter into a long trade. Because there is that possibility that the 80-day cycle trough still lies ahead, I will assume that the G category interaction with the FLD is what is coming next. What is the worst that could happen here? I could be wrong, and price might come up to the 20-day FLD, shoot through it, and provide us with a fantastic trading opportunity. The worst that has happened to me is that I've missed an opportunity. Trading opportunities keep coming around in the markets, and I don't mind missing a trading opportunity if I'm not convinced that it is going to be a profitable one. Now, I'm going to play devil's advocate for a moment and describe a slightly more complicated angle on this situation and discuss the possibility that the G category interaction occurred over this weekend that has recently passed. So we have our F category interaction here, then we have the G category interaction there, and the H category interaction is what we have seen. That would render my consideration that the G category interaction still lies ahead of us meaningless, because perhaps the G category interaction has already occurred. So a few points here. First of all, you might say, but price didn't move over the weekend. Well, no, but it's one of Hurst's fundamental concepts that we need to include all time, 24 hours a day, 7 days a week on our charts and in our cycle analysis. So we have no evidence of price moving over the weekend because there was no trading in this particular market over the weekend. The other reservation that you might have is the fact that even if we assume the price did move over the weekend, it didn't possibly get anywhere near the FLD because the FLD was so high at that time, and it's a big stretch of the imagination to assume that price came all the way up to that FLD in imaginary trading over the weekend. Well, I agree with you, but you must remember that interactions with the FLD, as I've mentioned in previous market update videos, aren't limited only to price touching or crossing the FLD. The simple action of price moving towards the FLD is an interaction in itself. So let's entertain this idea for a moment. If the G category interaction did occur silently and invisibly over that weekend, what would it tell us about that interaction? And I hope you're beginning to get an understanding for how this works now. Because if price did move towards that FLD over that weekend but didn't quite get there, what does that tell us about the state of the bullishness or bearishness of this market? You would be correct if you told me that that indicates that in fact the market is very bearish, because the G category interaction, as I've already mentioned, is expected to occur when price reaches up and touches the FLD and finds resistance there. So if a G category interaction has already occurred, it occurred in such a weak and feeble way that price didn't get anywhere near that FLD, and that is a sign of very strong bearishness. So even if you want to apply this argument that the G category interaction has already occurred, thereby implying that we don't need to wait for the G category interaction, and therefore the 80-day cycle trough has already occurred on the 6th of August, then the counter-argument to that would be, well, yes, if it has already occurred, then that is an indication of extreme bearishness in this market because of the failure of price to reach the FLD. If there is such extreme bearishness in this market, then even though an A category interaction is usually a good, profitable one, I would not be interested in taking this trade. One of the most valuable lessons I believe that you can learn about trading the interaction between price and the FLD is that you don't have to trade every single interaction. We track our analysis and our understanding of the markets by trying to interpret each and every interaction with the FLD, but you certainly do not need to trade each and every one of them. In fact, our research has shown that the two most profitable interactions to trade are the C category interaction on the long side and the F category interaction on the short side. What about this A category interaction? It looks really nice and you often do get very good trades out of your A category interaction. The problem is that sometimes those A category interactions could turn out to be premature trades, and they are not A category interactions at all. They are in fact G category interactions. And so for that reason, the profitability of those A category trades, or at least trades that are entered on the assumption that they are A category interactions with the FLD, are not in fact among the most profitable interactions in the full sequence. I do hope that you found this market update interesting. If you find that you have any challenges when it comes to moving from a consideration of an analysis to making trading decisions, I would really love to hear from you. So the link for answering that question is on your screens at the moment. If you have any questions, please do put them into the comments under this video or send us an email. I look forward to hearing from you.